Snowflake is a data technology company, and since data is the foundation where artificial intelligence is built upon, a lot of investors are curious what's going on with Snowflake stock. I'll answer some questions about the company here in this video according to their latest developments, share with you my proprietary discounted cash flow valuation model, which calculates a fair value, and update my buy, hold, or sell recommendation on Snowflake stock. It's a lot to cover in a short video. Let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Snowflake, in their most recent quarterly update with investors with Wall Street Analyst, reported quarterly revenue of $1.1 billion, which was up 32% year over year. More importantly, remaining performance obligations totaled $6.9 billion with year-over-year growth of 33%. Remember, remaining performance obligations include contracts the company signs but have yet to turn into revenue. Eventually, they will turn into revenue. When a company like Snowflake signs a 2-year deal worth $2 billion, it doesn't record that immediately as revenue. That goes into remaining performance obligations, which eventually turns into revenue as Snowflake performs whatever it was that it signed the contract for. The net revenue retention rate was a very healthy 125%. This measures how much existing customers spend with Snowflake in their second year of service. This is an important way to measure the customer value proposition, which is an important step in my 6-step framework for evaluating stocks. 125% net revenue retention means existing customers spend 25% more with Snowflake in their second year of service compared to the first year. So that means that Snowflake is offering a good customer value proposition. Otherwise, why would existing customers spend more with Snowflake in their second year of service? If they didn't like the value they were getting, they would look to a competitor or cut their spending with Snowflake overall. Their non-GAAP operating profit margin increased to 11%, reflecting their focus on efficiency and operational growth. On the flip side, the company's margins have been compressed slightly as a result of increasing spending on the infrastructure needed to support the growing business. So management liked the prospects early in their year so much so that they're increasing their growth expectations for the rest of their fiscal year. So in the second quarter, their non-GAAP adjusted free cash flow margin came in at 6%, and the company expects free cash flow to be weighted to the second half of the year, supported by contracted billings, a large renewal base, and large deal volume in the pipeline. They did not utilize their repurchase program in Q2, and they have $1.5 billion remaining on their authorization till March of 2027. So what that means is the board of directors of Snowflake authorized the company to repurchase shares up to $1.5 billion worth. But the company's management team didn't exercise that option, perhaps feeling that the share prices were overvalued and not worth the investment of company funds to retire some shares or repurchase some shares. And I agree with the management team. So far in 2025, I've had Snowflake stock rated as a hold because of the valuation. I felt that the stock was richly valued and not undervalued at any point this year. By the way, this document I'm reading from is the company's most recently completed earnings call with Wall Street Analyst. I made this highlighted document available for my channel members, and you can join for less than $5 a month. See the link in the description for all the benefits you get for joining our channel. This is just one of them, and there are dozens and dozens of these kinds of highlighted conference call transcripts already available to my channel members. Company does have an excellent balance sheet, though. They have $4.6 billion in cash and short-term investments. For the third quarter, the company is forecasting product revenue growth of about 25%. That would be a sequential slowdown from the 32 to 33% they reported in the most recently completed quarter. They expect operating margins of 9%, and they're increasing their guidance for the full year 2026. They now expect growth of 27%. So as I mentioned, I felt that Snowflake stock has been richly valued here in 2025, and I've had this stock rated as a hold in 2025. You can see here my calculation of the fair value of this business at $156 is significantly lower than the current market price of $241. So it still looks like Snowflake stock is overvalued based on my proprietary discounted cash flow valuation model. Even if you look at Snowflake on a forward price to earnings basis, the stock looks expensive. When I go to fiscal.ai, which is my preferred data source, the forward price to earnings is 181. So whether I'm measuring Snowflake based on the forward PE or whether I'm utilizing my proprietary discounted cash flow, they both point to the same conclusion, which is that Snowflake shares look overvalued. So the company is operating inside an exciting industry with data being the foundation where artificial intelligence is built, but most investors have recognized the excellence of Snowflake's business and have bid up the share prices, so you're not getting a very strong bargain with Snowflake stock at current market prices. So for those reasons, while Snowflake is making great progress, revenues improving, cash flows improving, and margins are improving also, the valuation seems rich to me at current market prices, so I will reiterate my hold rating for Snowflake stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.